Jonathan Barrett joining us from Commodity Broking Services in Sydney. Gentlemen, warm welcome to you. Let's start, Phil, with you. What are you hearing is the latest now in this kind of tussle for such a key waterway?
Well, the latest we've heard is that U.S. destroyers are now going through the Suez Canal at this moment. Now, we don't know if that's in response to the Iranian threat, but we do know that was reported. I mean, this is classic gamesmanship that we normally see from these type of producers in the Middle East, whether it be Iran or Libya, you name it. It seems like every time they get under pressure, every time their people are upset with their government, they try to align and redirect it to other people. And so that's why this is so much of a concern right now to the oil markets. The Mideast is already in an uproar. We've had two regime changes in the last couple of weeks. You know, now you've got Israel saying, hey, we're very concerned about this provocative act right now. We don't know how it's going to play out, and you've got to put the risk premium back in.
Jonathan Barrett, under those circumstances, are you surprised that crude only rose by the level it did? We saw US dollar weakness, and yet we only managed, if anything, roughly about a 67-cent build in the contract price. What's your view?
Yeah, Carson, I was a little bit surprised. I think, yeah, we've seen that Middle Eastern premium that Phil mentioned sort of come in and then come out again. And I think I was a little bit surprised because we did get some numbers or expecting more infantry builds there, only small, a little bit less than expected. But overall, I would have thought that crude, which had been correcting since that 92 down to that 84, 84 and a half, I would have thought it would seen a little bit of a lift. So I actually think the market's in a good balance. But yeah, as Phil suggested, anything could happen over there. And once we start to see a little bit more headline on it, I think players and investors will probably go back to oil.
Phil, as a currency play of it in itself, the way this has affected buying action, not just for crude, but other commodities overnight, you know, the dollar not perceived as quite the safe haven as, say, the franc or the yen in this certain set of circumstances. What do you make of that?
Look, I think the US dollar...
I think that
sorry,
the
you go ahead,
currency
Phil.
market... No, go ahead, Chad. I thought it was JB. I think basically the currency market is looking at this as a regional problem to a certain extent, and I think that that's why we saw the euro go up and see the dollar go down. But we did see some activity. If you look at it, some of our interest rate futures, there was some protection going on here. So I don't think it's going to be purely that play. If this thing blows up, obviously Europe's going to be more at risk of contagion. So we'll probably see that flip to the dollar. So I think it was more of a knee-jerk reaction. But getting back to the reason why oil prices aren't going up more because of this situation, it's mainly because Cushing, Oklahoma is really anchoring the world oil market right now. And the record supplies in Cushing, Oklahoma are keeping the Brent crude from probably going to record highs off of these fears. If you would have told somebody, 5 years ago that we'd have this kind of a conflict and uprisings in OPEC nations, oil prices would be up much more dramatically than they are now. But the world's benchmark, WTI, is holding them back. And I'll take it a step further. It seems from the traders I'm talking to and the plays that I've been doing, it's a risk-on, risk-off type of a situation. When you're worried about the Middle East, what you do is you buy Brent, sell WTI against it. When you're taking that risk trade off, it goes the other way. That's been the trade, and you can see that consistently. You saw it especially when you rolled over from the March to the April contract. March just started to go down on those heavy supplies, and that's really been the play for the last few weeks.
Jonathan?
Look, I think it is interesting. I do agree that there is this play where Brent appears to be the one that's leading the concerns in the Middle East. But I think the interesting thing here, Carson, is that the Brent oil contract is actually reducing in supply. Now, Brent C oil is actually reducing by about 20% per year. So the actual supply of Brent onto the market reduces, and it is a much heavier oil. So it doesn't really make the right to be the lead in terms of where the pricing should be. So I think this disparity is there, but I think it's there for different reasons.
All right, so you're saying your preference, your bias is still back towards NYMEX as kind of a broader benchmark. Gentlemen, speaking of supply issues, let's talk cotton, can we? Phil, in the pits, India in frame very much now, kind of a squeeze on exports. What's triggered that? How likely is it set to run? And how much upside further could we see in these cotton futures?
It's absolutely one of these markets where how high is up. I mean, we definitely have a psychological target of $2 here in the USA. And, this is a market where we have our real concerns of shortages. What is going to have to come in at what price is demand destruction going to set in? We have seen this happened before in the cotton market where demand just falls off the map at some point. We can move to alternative fibers. We can use, polyesters. I hope my suit comes back in style. Forget about it. But, ultimately, that's what's going to have to happen because we know there's not enough supply. The bottom line is that the bottom line is we're going to have to see demand destruction where that goes in. Now, China makes this a new element because they continue to buy it no matter what the price. But when they start exporting those clothes, they're going to have to charge more money for them. All the clothes makers are going to be charging more. I think that we're getting to the point above $2 where this will run out of steam.
All right. It looks as if copper as well. Jonathan, what's your take on that? Is that one running the risk of running out of steam? Or like cotton, and like we just heard there Phil say, could China prop up the price regardless?
Well, I think, sorry, Carson, when you look at the two, cotton is an interesting one at the moment because I think there's sovereign wealth funds at play here. Now, India is the number 2 producer outside China and also the number 2 exporter. Now, because of the sovereign concerns over there, they're actually withholding supply to the export market. And because China is the number 1 producer and requires more, we're seeing this front really start to push. I think 2 is easily reached, but I think it will get to that stage where we will get a correction. Copper is at that stage where we have had a terrific move there, record highs already. And we're seeing a lot of inventory start to come back to those warehouses. Yeah. So as that starts to happen, you can start to think that copper will correct because the market is long. And I think basis the COMEX, if we break through about that $4.45 a pound, then I actually feel that we'll see hopefully a decent correction, just over the next month or so.
Plenty of contango going on in that copper price right now. Phil, final thought, the prince of the printing press himself, Ben Bernanke, what effect did he have overnight where you're concerned when it comes to his view on the economy? Really brief.
Bottom line is that I think that the Fed minutes today came out basically that there are some concerns. I don't think we're going to complete QE2. That's my prediction.
Bold call. Jonathan, are you with Phil on that?
No, I actually feel that they're going to have to complete it because they've got no choice, really, because the economy, I think, is pretty much running a lot under QE2. And if you take QE2 out of the equation, that's what I want to see, how the economy will hold up by itself.
Some frisson opening up between our two guests, Phil Flynn from PFG Best, Jonathan Barrett, Commodity Broking Services. Let's examine that one in detail next time. For now, many thanks, gentlemen.
Thanks a lot.